Welcome back to America's Retirement Headquarters, home of the Retirement Guys Formula and America's Medicare Associates with Nolan Baker. 419-794-3030 is the phone number. The website, arhq.com. Nolan, there was a very telling and interesting conversation between two market analysts recently on CNBC. One is warning that this bull market, it's running out of steam. The other was saying, what do you expect them to do about it?
But if you look at this bull market, technically it looks very tired. The volumes have dropped off significantly since the election, which is kind of bizarre. I just think we need a reset. It's never a straight line.
But most of your clients aren't very good at timing. And I say that not because they're your clients, because they're in the market. Most people aren't very good at timing as well. So you're asking people to stick with you at the moment because you're overweight and nervous, and then next 3 months or so, get out and then just find the right bottom and get back in again. That's notoriously almost impossible.
He brings up a good point, I think, and we say often there's people who know that they can't time the market, and there's people who just flat out can't time the market. If that isn't the answer, timing the market isn't the answer, well, what is?
Yeah, you do have to be very careful. Chaz Price, who's a certified financial planner here at the firm, I think he describes it very well when he talks about people trying to time the market, because you have to get it right twice. You have to figure out, when to get out. And then you also have to figure out when to get back in. Mm-hmm. I remember a gentleman that had come in from an event that we did a couple of years ago, and it was just a little bit after COVID, and he had talked about how he had moved his money to a cash position because of the volatility, and he was going to wait until after the election to get back in. And we now know, looking back, the last couple of years have been really fantastic, and he missed out on all of that opportunity if he continued to sit into the money market account, because he ended up not working with our firm. So that's a kind of a painful lesson. When you look at it, there's a couple of tips that I could give you for the 2025 market outlook. Number one is, I would say, be running what I would call the fire safety drill. I recently did a independent portfolio analysis for a gentleman named David. And when we ran the analysis for David, what we had found is that he had a portfolio risk level that was measured at 66. We measure risk anywhere from 0 to 100. So when you think about it, it's in terms of going, like in a car, 66 miles an hour. So here in Northwest Ohio, you've got to be a little bit adaptive to some of the market and some of the conditions that are outside, meaning that if it's snowy, you kind of slow down a little bit. And if it's sunny, you could, go a little bit faster, because in his case, if he got into a major accident at 66 miles an hour, it could be deadly. Mm-hmm. Now, David's getting ready to retire. And so if and when he moves into retirement here in a couple of months and then has the major market downturn, it could be very painful. And oftentimes what you'll see when people are trying to time the market, they're using their gut, or they're using their emotions to make those decisions, meaning that when the market goes down, then they make the changes. And that can oftentimes lead to why many investors underperform. In running the fire safety drill, what we would utilize in some of our portfolios is we could have some circuit breakers. With our circuit breakers, what we're doing is we're looking at the technical conditions of the market. And when the market goes below a level, then we would start to reduce some of the equity exposure. So having a clear exit strategy can be part of developing, that fire safety drill for your investment portfolio. The other times on what we do is we will oftentimes put what I would call a gas pedal on a plan. A lot of investors are in what I would refer to as like target date retirement accounts. And with a target date retirement account, it's almost like setting your car on cruise control. Again, just like David going 66 miles an hour, assuming he's on the expressway, 66 miles an hour on a sunny day could be perfect. But if it's bad weather outside and you're on a side street, that could be extremely dangerous to do that. But putting a gas pedal, what that does is that allows our firm to be more adaptive to what the market conditions are. So if the conditions in the outlook ahead doesn't look as strong, we can reduce it, and we can go from, say, 66 miles an hour down to 40 miles an hour. So if you don't feel like you're adaptive to what the market conditions are, I think looking at the investment methodology in the portfolios that we have here at America's Retirement Headquarters and the Retirement Guys formula can maybe help you understand the methodology, the philosophy, and the process that we go through. Now, when I look at the 2025 market outlook, I do think that there's a lot of things to be optimistic about. First of all, you've got the Federal Reserve has been cutting interest rates in a non-crisis environment. And I think if we look at things historically, when we're not in a crisis environment and the Federal Reserve is cutting interest rates, that can be a positive for the market. We also have, in general, good economic conditions. I think that we have an incoming administration that is going to be focused on U.S.-based companies. And in general, though, on the flip end of the scale, what you could say is that when you've got 2 years of back-to-back double-digit growth in the stock market, it would be fair to say that it would not be surprising to see a little bit more slower growth than what we have seen in the past. We also, I would say, have the consistent threat of inflation and interest rates. Inflation could come back and remain above, where it was at last year, potentially influencing some of the monetary policy decisions that are made. And that, persistent inflation could cause them to either, stop lowering interest rates, pause lowering interest rates, or even, potentially look at higher interest rates, which could impact the borrowing cost and corporate profits. The market valuations, as I mentioned, if we look at market valuations using something like the Cape-Shiller Index, market valuations right now are very elevated. If you look at also the history in intra-year market returns versus the actual year-end numbers, it's not surprising to see market volatility where you can see the markets move up or down 10 or 20% within any given year. With the new administration, you'd want to consider what some of the policy changes are going to happen. Are they going to extend the tax cuts? Is there going to be deregulation? Where is there the potential tariffs? What companies would be impacted there? But also, where does that create opportunity? We have, I think, the continued threat internationally from the geopolitical risk. We've got a lot of global tension right now. So you want to pay attention to what your sector performance and investment strategies are and make sure that you understand that methodology and philosophy. So if you're an investor and you do not understand what you own and you want to find out if your portfolio is put together for an optimized outcome of 2025, give our office a call. We can put together a retirement team action plan and help you develop a 2025 game plan.
Not just developing a plan for, the year ahead, but the years to come as part of that overall plan, how to make that work as efficiently for you as possible. It all starts with reaching out and asking for that retirement team action plan. You could do so by giving a call right now, 419-794-3030, or you can go to the website, set up a time there as well, find out more about the entire team at arhq.com.